Thanks for staying with us on the News at 1. Let's take a look at your market news now. Asian traders remained nervous at the end of a volatile week. Amid positive global growth prospects, the worry of a global trade war persisted, while concerns about continued volatility with U.S. President Donald Trump's administration also continued. Attention is now on the Fed Reserve's meeting next week, where it is expected that interest rates will go up. Japanese stocks continued to be on the ropes, with the Nikkei share average declining by 0.6%. Hong Kong stocks were also under pressure, the Hang Seng Index closing down 0.1%. Chinese authorities came out to say they were ready to retaliate if import tariffs are implemented. Equities in that country also closed down in negative territory, with the Shanghai Composite Index declining by 0.65%. Wall Street stocks closed mixed last night amid choppy trade. Markets got spooked on reports that U.S. Special Counsel Robert Mueller had issued a subpoena for documents related to Donald Trump's businesses. There were also rumors that Mr. Trump is set to axe more members of his administration, giving rise to uncertainty. The Dow Jones Industrial Average rose 0.47%. The S&P 500 lost 0.08%. while the tech-heavy Nasdaq Composite Index slid 0.2%. For more on the markets, we crossed to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Volatile weeks for markets in Asia and the States.
That's right. It's been volatile all round, and it's really had a lot to do with Mr. Trump's shenanigans, what with him firing Rex Tillerson earlier in the week. The week before that, his economic advisor, Gary Cohn, also decided to jump ship because they weren't in agreement around the import tariffs that Mr. Trump has decided to levy on the rest of the globe. And of course, you know, scandals coming up, an ex-porn star coming out and talking about Mr. Trump and his company apparently trying to ensure that she stops talking and all of that. So Mr. Trump is very much at the center of a lot of concerns and uncertainty as to what's going to happen in the future. But on today's markets, we see that the all-share index is it's bucking the trend. It's up relative to other markets, but generally markets are down. On the all-share index, we do see that the industrial counters are not doing well at all, and of course that will be directly related to the fears around the global trade war and what it means for commodities, etc., etc. And then we also see that the local currency is on a bit of a back foot. It's now flirting with 12 against the dollar. It's just under there. Let's take a look at the indicators. I'm joined by Warwick Lucas. He's Chief Investment Officer at Galileo Capital. Thanks for joining us, sir. It's been a while.
My pleasure.
Good stuff. Highly turbulent week on the global markets. And as I've argued, I think it's all to do or stems with Mr. Trump. Is that too simplistic?
I think it's certainly part of the parcel. I think there's sometimes a failure to appreciate that the difference between ruling in government and ruling in business can be quite substantial. Government is relatively democratic, whereas business, in the end of the day, at the very top, tends to be quite dictatorial. And it does mean that a businessman isn't necessarily your best national executive, nor running a country so much like running a company as some may think. So yeah, I mean, one of the things that generally business looks for from a government is that it is providing a stable, relatively predictable environment, and in an environment in which he's clearly rotating a lot of his key appointees. This is not happening. So, yes, I think some of the concerns very much relate to both the style of government and the substance. And certainly the substance would also relate to, well, what is going to happen to trade wars? I mean, is this going to be a punch-em-up negotiation that, after a serious flurry of blows, gains small microscopic advantages, or is there more to it?
At what point do we say that there is a trade war? EU's come out and said we're going to retaliate. China's pretty much said the same thing. So at what point do we recognize that there is a trade war going on?
Well, I think it'll be by degree. I mean, clearly, if those retaliations get followed through on, you certainly are into the frontier skirmishes, aren't you? So the big question is, well, then, is the tit and the tat being recycled back at each other? So we'll see.
Let's wait and see, indeed. And then let's just take a look at South Africa. Obviously, there's been a lot of positive interest in the country. We've seen equities being bought up quite substantially by foreign investors and locally. So my question to you really is that as the perception of South Africa changes, has that changed the way that you're constituting your clients' portfolios? Are you buying more South Africa Inc. type stocks?
Well, it certainly changed what's performed. A bad political environment meant that those companies priced for it up until December had scope for substantial re-rating after the conference in December. So a so-called value stock, like the banks, quite a few of the local industrials, etc., had very big runs since. So the big opportunity has passed. I mean, but this kind of blind rand hinging we've seen, I mean, that game is out of the park. I think the one thing I should point out is that amongst fund managers, I mean, the winners and losers has substantially changed since December, unless you've had a particularly flexible fund manager who's managed to rotate the entire portfolio around. So big winners in the past have suddenly had to do a lot of catching up as the game changed.
Well, I think Steinhoff will have a lot to do with that, because that was the darling of many a fund manager up until December, when they announced that there were irregularities with their accounting. Still on Steinhoff, I see that they've been frantically selling some of their assets, stakes in PSG and also in KAP, or CAP as it may be called, and they're contemplating selling their prized asset, that is Steinhoff Africa Assets, selling part of it. It does sound quite desperate. From where you're sitting, is it paying off, this strategy?
Look, it may or may not be desperate. I think in the case of Star, I think, first of all, I think Star management would like a little bit more independence, for one thing. A 77% stake is very substantial. And I think the second key thing is that Steinhoff Holding itself has to restore trust in both its business partners and its bankers, and the surest way to restore trust when you've been over indebted is to do it with cash. So the CAP stake had to go. The PSG stake clearly was a relatively strange investment for them, so that had to go. The amount of Star we'll see, but the key thing that Steinhoff had to avoid was getting itself into the situation where there was going to be a fire sale of assets, i.e. bankers said, right, we've had enough of you, we're wrapping you up and liquidating you, and we're just going to bang everything out. Now clearly Steinhoff needed to put that problem out of the park, and a controlled sell-off process improves their liquidity and puts Steinhoff management back in the front of the game. So I think it's a very healthy process that they're going through. What it actually means, we don't know. They're long past due-by date in terms of actually putting results out. We actually have no idea just what the mess looks like. Perhaps bankers have a better idea, I don't know. But in terms of staying on the front foot, they are at least making the right moves there.
All right. Well, we've run out of time. Thank you so much for your time, as always. Warwick Lucas, Chief Investment Officer at Galileo Capital. Do have a fantastic weekend. After a short break, and Zinga with more business news for you.